I was herbing them in the home of the Turpins. Got it dirt cheap for them. Plus, if they were short with cheese, I would work with them. Let's go. Welcome back to House Rich, the first time home buyer show where we still help millennials figure out where do I get started in real estate and how to build generational wealth. Today's topic is the Maryland SmartBuy 3.0 program, which if you're short with cheese when it comes to paying off your student loans, they will help you pay off $50,000 in student loan debt. So you may not be anywhere near Maryland, but you may want to listen because $50,000 is a lot. It may be enough to get you to move there. The intro was sponsored by Brooklyn philosopher Sean Corey Carter III. Let's get into it. All right, quick exercise. Close your eyes. Well, maybe not if you're driving or walking around, but just imagine what you were doing 5 years ago, right? All right. So what were you doing? Like, are you with the same friends? Hopefully, maybe. Like the same spouse? Hopefully, maybe. But like, think about like the other significant stuff, like the girlfriend or boyfriend, the job. Do you have the same car? Like, are you in the same financial situation? Are you doing the same stuff? Like, probably not. Like, 5 years is a long, long time. Especially like if you're in your 20s. Like, think about from 20 to 25 or 30 to 25. Like, a lot changes in that time frame. So I'm not saying like move to Maryland just to get your student loans forgiven, but if you don't got a lot going on and you're just kind of like hanging around, why not? Especially if you're like in the surrounding areas, like of course like DC, Virginia, but on the outskirts like maybe Pennsylvania, Delaware, it may be worth the move, but of course you need the job to come with it because you qualify for the loan like you would any other loan, so you need income and a job to actually qualify for the loan. So let's talk about that first. But yeah, so it's up to $50,000. And so basically it's 15% of the purchase price and how to get to that number. So if you want to work backward and do the math, it's $333,000 and a bunch of other threes after that. It's got to be like the price of the home to get up to $15,000. So a couple stipulations. It does have to be your residence. It can't be like some rental property or something like that. You have to be at least like 18, which if you have student loans, you probably are at least 18. You actually don't have to be a U.S. citizen. You do have to be a first-time home buyer. So what is a first-time home buyer? A first-time home buyer is somebody that has not owned a property for the last 3 years. That's a first-time home buyer. So if you own a property, sorry, you're out of luck there. But also, you cannot own any real estate at the time of closing. So be wary of that. And so let's talk about the income requirements. And so you're going to have to look that up because it varies per county and it varies per like how many people are actually in the household. So there's not a way I can tell you the exact income limit of the program. But in order to find honestly any of this information I'm talking about, just Google Maryland SmartBuy 3.0 program. It'll pop up. It'll be like the Maryland Gov site. It'll have the Maryland flag, that looks like this on the website. That is the site for the SmartBuy 3.0. And it'll be like a SmartBuy 3.0 fact sheet is where all this information and more will be listed at. And so you have to use conventional financing. So you have to put down at least 5% of the money on the property. And also of note, you want to actually check with your lender on this, or maybe you want to check with yourself at first, because if you have like more than 20% of the purchase price, like in liquid assets, you may not be able to qualify for the program. So it's to help people that don't have the money to actually pay their student loans. So I'll say this, you may want to, if you have like 2 bank accounts, you don't want to show the lender the bank account with a bunch of money in it. That could go towards a student loan. So I'll just leave it at that. But be wary of that requirement. It's having too much money in your accounts could actually disqualify you for the loan. And so let's talk about paying off these student loans. And so how it works is you have to pay off at least one of the loans first before like you pay off another. And so what that means is like you can't make partial payments on loans, or like if say there's a situation where you and your spouse both each have $40,000 in student loan debt, you couldn't set up a situation where like one spouse has $25K paid off and another spouse has $25K paid off, so you both have $15K left. You would have to pay off the entire $40,000 on the first loan, and then the other person could only get 10. And so you can't like split it up. It has to be you're paying off one loan first before you move to the other loan. So no partial payments there. And so if you're wondering about like the actual lenders, it has to be done through the Maryland mortgage program. So once again, you want to go to the website I mentioned before and pull out a list of lenders that are eligible for this program. So you can't just go to any, random lender and say, hey, I want to do the Maryland SmartBuy program. It does not work like that. All right, so let's talk what's going to actually happen with the money. So Maryland is going to pay off the $50,000 of student loan debt in your honor, but it's not like, okay, you got $50K paid off and you can just sell the house or run off to California or do something like that with the property. Once again, it's a primary residence property. And so what happens is basically there is a second loan on the mortgage forgivable after 5 years. So, let's say and it's 20% a year is forgiven. So let's say you got paid off $10,000 in student loan debt, right? So after year one, you'd have $8,000 left, then $6,000, then $4,000, and $2,000, down to zero. So it's paid off in those increments. But hey, you're not like, hey, you can never move from the property or sell the home or do anything like that. Stuff happens in life, right? And so if you decide to pay off the mortgage or move before that time frame, that 5 years, you basically have to pay back what is left. So, after 2 years, you have to pay back $6,000, essentially how that works. And so the aforementioned option was like a 0% loan over that 5 years, but you can also have it set up as like a down payment assistance program. It's a weird option to take. See the website for more details on that. I'm not going to get into it, but it's a weird option to take when they're giving you a 5-year forgivable 0% interest loan. Thank you for listening to the show. If you want to connect with other listeners and also dive deeper into topics, as well as attend live trainings every Tuesday at 8 p.m., click the link down below and join the First Time Homebuyer School. See you inside. So you're probably wondering like what student loans are eligible, right? So high level, it has to be from an accredited school and basically somebody that's eligible for student loan aid. So it can't be like some guy you saw on IG that's offering some $10,000 course or something you saw online, some program like that. It has to be an accredited school. Basically, once again, somebody that's eligible for student aid is it's kind of the trick. But eligible for student aid is good to go. And so like your loans can be in deferment during this program as well. Some other things is you have to take like a quick HUD approved test. Taking a hour long, not even a test, it's like kind of like an online education course. There, I guess you could just kind of skip through it if you want to. And so you actually can, so the interest rate is a little bit higher than the normal, but once again, I say weigh the pros and cons of, getting potentially $50K every student loan debt paid off, and actually maybe weigh it against just traditional, conventional financing. And so you can refinance the loan. If you refinance it through the Maryland mortgage program, nothing happens with that second loan. And it has to be in order to actually to reduce the interest rate. I'm not sure what else you're refinancing, but it does point that out on the website as well. And so if you decide to refinance it outside of the program or once again sell the property, you do have to make the payment on whatever's left on that property. So once again, you can weigh that against what's left on the property versus potentially lowering the interest rate depending on where rates may be 3-4 years from now. That's it. That's the program. Tell a friend to tell a friend. I think it's a pretty dope program. If I was still in Maryland, I would probably use it. Well, actually, I didn't have any student loans, so I would have no need to use it. Join the military. That's another program where you get your student loans forgiven instantly. But that is all for today. If you're watching on the tube and you haven't subscribed, like what's going on? Subscribe to the channel. If you're listening to the podcast, like leave a review. Like literally, you hear me say this after everything. It really helps the podcast move up the rankings to get out to more people. So like I'm at the end of the podcast. You can stop right now and just click on the thing, leave a review. It takes like 15 to 20 seconds. So I really appreciate if you do that. And so as always, buy land. Rumor has it they're not making any more of it. And so we meet again.